Hello, today is March 23rd, 2014, and I'm Jeffrey Tennant. Let's take a look at Friday's major reversal. mejt gave a few signals. Early in the day, it said that ultimately higher prices would print, which they did. Later in the day, it said that lower prices would print, which they did. And there's no mejt signal for Monday. So let's look at other forms of technical analysis and see what we can come up with. I'm going to start off by saying it's now obvious why I did not take the long position for Thursday, which was called for during Wednesday's trade. Reversals like this can deplete a lot of one's capital. I think this is a very dangerous time to be long. If we look at some other charts, we can see the NASDAQ has not hit a new high, and there was huge volume on the reversal. We'll see the Standard & Poor did hit a new high intraday and promptly rejected it on big volume. Big volume tends to add to the validity of a move, and the divergence at the top is not good. When we hit the new high, it issued a major sell signal based on someone else's work. Doesn't mean the bulls are necessarily through yet. There is a case to be made for a higher high still if we gap over, if we gap up high enough. Let's look at this. We had a Fed announcement here. It typically has 3 legs to the whipsaw: down, up, and down. Usually each leg is longer than the last one, and this one was truncated. This move up from the point of the announcement isn't as big as the move down. Once we go through the announcement point, it's usually over, but if we gap up over that level, and particularly if we gap up over this high, it would reinstate the count. I don't think it's likely, but we won't know for sure until the open on Monday. I don't think it's likely because the gap up took out this high, this high, this high, all these highs. And after taking out all the highs of the prior consolidation, we closed under the consolidation's low and even under the high of the prior consolidation. That's not strong action, but it has to be confirmed by continuing lower, and it would be invalidated if we gapped up high enough. Let's take a look at a daily chart. We've had this long trend line from the October 2011 low. We've hit this trend line a number of times, close enough for me, and we hit it right at the high on Friday. Fans of Fibonacci ratios will like the 618 trading day length of the rally. To me, this is a major reversal from a new high on big volume. I still have a case to be made for some higher highs based on the Fed whipsaw and some signals in the futures market. But if we don't gap up strongly Monday, and I don't think we will, I don't think we're going to see those highs or any higher highs for a long time. The system itself doesn't have any call for Monday, but we have sell signals all over the place based on factors outside the system, and that's the call.